6 Key Lessons on Financial Freedom from Rich Dad Poor Dad. In Rich Dad Poor Dad, Robert Kiyosaki talks about personal finance from a perspective that nobody else had ever explored. He paints a picture of his childhood where he had two dads to look up to and learn from. The poor dad, his biological father, was a learned scholar and worked with a university as a professor. He had a fixed pay, good benefits, and job security, yet he still struggled to pay the bills, while the rich dad, his friend's father, wasn't much educated and didn't have a job, but he managed his business well and went to become one of the richest men in Hawaii. This book revolves around the difference between these two dads and their financial literacy, mindset, and habits, and how they manage money. Here are the 6 major differences between the rich versus poor mindset in Rich Dad Poor Dad. Number 1. The rich don't work for money. This is the most common trait that makes the difference between rich and poor. According to Rich Dad, the poor and middle class work for money, whereas the rich have money work for them. Rich people invest their money into assets like income-generating real estate, bonds, stocks, and businesses, which generate a steady income for them without them having to work. They employ their money to make more money for them. While the poor always keep working for money, so they are always stuck in the rat race to get better pay, benefits, or job security. The rat race is defined as the vicious cycle we learn from a young age, that the only way to get ahead is to go to a good school, get a good job, and work harder and harder to try and get ahead. Kiyosaki says that people's lives are controlled by the human emotions of fear and greed. If you want to become rich, first, you have to alleviate your fear. Fear keeps most people to stay in their job, because they fear of not being able to pay the bills or not having enough money. Learn how money works, then work out how to make it, independent of a paycheck. Look into how you can generate more income by investing your money wisely. And don't give the financial power to your employer, but rather keep the power by taking control of your money, and making it work for you. Number 2. Why teach financial literacy? The cause of so much financial trouble is due to a lack of financial education. Our education system trains us to be good employees, and work for money, not good employers. A person can be highly educated, professionally successful, and yet be financially illiterate. The road to financial literacy begins with, first, understanding the difference between assets and liabilities. Kiyosaki defines assets and liabilities as, an asset puts money in your pocket, whether you work or not. A liability takes money out of your pocket. This can be explained with a simple example. The house you are living in is not your asset but your liability, because it is taking money out of your pocket instead of putting money in your pocket. It's really not an investment, until and unless you sell it, take your cash, and invest it in something that will produce income. But if you rent it, it's an asset because you are getting income as rent. According to Kiyosaki, a person's financial intelligence is made up of knowledge from 4 main technical skills: accounting, investing, understanding market, and the law. He summarizes the current scenario with 3 observations about the cash flow. The rich buy assets. The poor only have expenses. The middle class buys liabilities they think are assets. Number 3. Mind your own business. Your profession and your business are different from each other. You should not rely on your job to become financially secure. Instead, mind your own business, and remain focused on the goals you have for yourself, in order to become financially free. As Kiyosaki puts it, financial struggle is often directly the result of people working all their lives for someone else. Taxes are paid to the government, liabilities are paid to the bank. The only way a person can pay for themselves and work for themselves, is by buying or building an asset. Therefore, try to figure out different legitimate ways to build wealth, look for opportunities, or invest in businesses to build more assets, and generate a strong flow of income. You can keep your day job, but start investing and put your money in assets, not liabilities that have no real value. Number 4. The history of taxes and the power of corporations. The idea of taxes was started to fund the wars, and it was intended to punish the rich, but it wound up punishing the very people who voted for it, the poor and the middle class. But the rich play the game smart, and avoid paying taxes by creating corporations. It's the biggest secret of the rich. A corporation is merely a legal document that creates a legal body without a soul. It is popular because the income tax rate of a corporation is less than the individual income tax rate, and certain expenses could be paid by the corporation with pre-tax dollars. Corporations are different from individuals in that they earn, spend what they want to spend, and pay taxes on what's left, whereas an employee gets taxed first, and must pay expenses on what's left. And most people don't realize this: the harder they work, the more they pay the government. Number 5. The rich invest money. Often, it's not the smart ones that get ahead in the real world, but the bold. The one thing that holds all of us back is self-doubt and self-confidence. While most people wait around for luck and opportunity, the rich ones are creating opportunities out of obstacles. Most people know only one solution: work hard, save, and borrow. They don't understand that both luck and money are things that are created. In contrast, the rich know that their mind is their most valuable asset, and they take calculated risks. They invest their money so that they can take back their initial investment quickly at a profit. From this profit, they make more money. In essence, they have made money from nothing, since they got their initial investment back. Your financial intelligence requires both technical knowledge and courage. Take the time to develop your financial intelligence, and harness the power of your brain to create assets. As we develop our financial intelligence, and begin to put it into practice through investing, we should welcome failures as well as successes. After all, failure is part of the process of success. Number 6. Work to learn, don't work for money. Many people spend years in school, achieve amazing grades and become really talented in a particular field. Yet they're still poor, or struggle financially, or earn less than they're capable of. All too often, it's not because of what they know, but because of what they don't know. What most people don't realize is that the more specialized you become, the more you are trapped and dependent on that specialty. According to Rich Dad, one needs to know a little about a lot, and learn all aspects of a business system. Work with people that are smarter, and bring smart people together as a team. You should aim to learn a little about a lot, instead of seeking specialization, because specialization is for employment, not for being rich. Instead, take the jobs you need in order to learn to manage cash flow, systems, and people. Kiyosaki also stresses the importance of sales and marketing skills. These are specific knowledge that people should acquire to help them reach the road towards financial freedom. For example, a writer can produce a great novel, but a writer who can also sell and market themselves is already one step ahead of the game. To conclude, Rich Dad Poor Dad is one of the best books one should read if you want to start your financial journey. The author has used simple English and has stayed away from all the financial jargon. This is a book for the layman, as well as the expert. If you read through these lessons, and don't yet understand or agree with the Rich Dad perspectives, get the book, and read the stories. This is a book of perspectives, and perspectives must often be caught, rather than dictated. If you find this video helpful, please like and share. Don't forget to subscribe and click on the notification bell to get notified. Thank you for watching.